Once again, my name is Dave Osmond with MetaStock. Don't be fooled, it says Kelly Clement in the box there, and for some reason whenever I log in, it logs in as my good friend and colleague Kelly. So we're just really glad that you're here, and we're excited about a great presentation about some very interesting indicators that I'm really looking forward to having Bennett explain to you. They've been very popular and very useful to a lot of people. Before I start, I need to read our standard disclaimer. Here it is, and if you'll just bear with me a moment so I can take care of the legal stuff. Let me just read this down before we jump into the presentation. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Thank you. Okay. Excuse me. So let me give you a little bit of an introduction to our presenter today. Bennett McDowell, he's the founder of TradersCoach.com. He's been all over the financial world. He really knows his stuff. He's been a registered securities broker, financial advisor. He really understands Wall Street. He understands the art of trading, and he really understands technical analysis. In fact, he's a regular contributor to Technical Analysis of Stocks and Commodities magazine, who we're very familiar with. I've read many of his articles there, and a lot of the things that he's actually published as well. I'm very excited to hear from him on these two indicators, the PTF and the Owl indicators. And we'll go ahead and turn the time right over to you, Bennett.
Well, thank you, Dave. It's great to be here. I want to welcome everybody. Let me also just make sure everybody can hear me okay. Just let me know, a few of you in the chat area, that the volume is okay and that you are clear. Super. Okay, great. Thank you. Excellent. All right, well, let's go ahead and get started. Today we're going to talk about two indicators that I designed and developed called the PTF and the Owl indicators. PTF is an acronym, stands for the Precision Trend Filter, and the Owl stands for the Optimum Wave Locator. So we're going to go into detail on how these work. These are programmed for MetaStock, and so we want to show you how they're going to work on the MetaStock platform as well. For those of you that really aren't familiar with me but want to learn more about what we do here, I have 3 books currently published. One's on risk control, and that's called the Trader's Money Management System. The one is on the Applied Reality Trading System, which is a system I developed for entries and exits, and it's primarily a trend trading system. And the other system is called A Survival Guide for Traders, the other book rather. And that's a book that covers everything from business plans, but really allows you to use your skills as a trader and be able to apply them right from your very own home. And it's just a great book to prepare you for what's out there in the marketplace. And all these books are available at any major bookstore, including Amazon. I'm also working on another book called the Elliott Wave Techniques Simplified. This is due out this fall, and this one is being published by McGraw-Hill. So this was going to cover the Elliott Wave techniques that I have found to be most useful over my over 20 years of trading in the markets. All right, I think we already had a disclaimer, but I'll throw one in there, Dave, as well. I know you did it already, but we like to just basically say that there is risk, of course, in trading. But without that risk, there's no opportunity. So the two go hand in hand, and I think that's pretty true for most everything we do in life. So basically, there's risk in trading. Just fund your trading account with money that you can afford to risk, and then, of course, use great risk control, and you should be A-OK. We're going to skip the sweepstakes and move right on to our topic today. And I got a few questions I want to ask folks today. Have you ever been in a trend and wondered if the recent top, or if you're in a bearish trend bottom, is at the end of that trend? In other words, are you expecting the trend to be in a brief correction at this point, or would you go higher? Have you ever been in a situation like that? Let me hear from some of you out there. Because I can tell you there's many times I've been in a trend and we were at a top that seemed like a major top, and yet sometimes it would be nice to know if we had a situation where the trend was going higher. Well, Douglas says no. Well, Douglas, you may not trade very much because there's a lot of times when tops occur, minor tops in certain wave sequences that you'll see that are preceded or post-preceded by another high. So we have that all the time in the markets. And I know when I went to develop the precision trend filter, this was one of the things I wanted to try to solve, is to figure out when a trend had potentially ended and if we were going to get more highs, especially if, obviously, if it's an uptrend. All right, so this is, something that when you're trading, your indicators may, at that particular point, depending on how you enter and exit the market, may still have you long in a trend, but also, too, you may be making decisions about how to scale out of a trend. In other words, if you're a trend trader, you don't want to leave a trend based on emotions, but at the same time, you may want to scale out at times. And so it's good to know when's a good time to scale out and when is a good time to hold tight. So these indicators that we're going to talk about are going to help answer that question today. All right, so the other nice thing about the indicators is that they can be added on to any trading approach. So we're not going to deliver here exact entries and exits. We're pretty comfortable with you having your own trading approach doing that. These particular indicators are more like filters. They're very helpful filters, and I think that'll become more apparent as you actually see them on actual charts. So what we try to do with these indicators is basically stack the deck in your favor when you're entering a position or even considering an exiting position. So let's talk about the first filter. It's called a PTF indicator, and it stands for Precision Trend Filter. And it is located at the bottom of the chart. So if you notice down in this area here, you'll have green, then it will turn to yellow, back to green, back to yellow. This is the PTF indicator, and it is extremely easy to use. Basically, when it turns green because the oscillating line has gone above an upper band, and basically you don't have to pay attention so much to the oscillating line as you do just to the color. So if you have a green color that's generated on a price bar that's reaching up to a new high, you know at that point this indicator has a 75% accuracy rate that you're going to get higher highs eventually before you get lower lows. And sure enough, that occurred here when the prices exceeded that first circle on the far left-hand side of the chart. And when it exceeded at this time, it turned yellow, indicating that yes, it's making a higher high, but at that time the momentum was not high enough at this new high where the arrow is to generate a ongoing green color, so it turns yellow. Then a few price bars later, it turned it green again, and it indicated on this price bar here as it was reaching up that we were going to have higher highs. The market settled back a few price bars, turned around, and made a higher high again, and yet the momentum at this particular point was out of the market, but then turned back in favor on the next high. So each time the market is making highs, it's giving you an indication of whether you're going to get higher highs after this particular high. And on this indicator here, as long as you have a green background, you're going to get higher highs. That's the way it works. So even after this far right-hand side had pulled back a little bit here, all right, the trend was not over. This was a minor correction in an ongoing trend, and then it proceeded back up eventually to make a newer high. So it's really helpful, especially if you're thinking about trading. Let's go back to the left-hand side of this chart. Let's say you had this initial breakout here. We've had many stocks, PLUG, we've had Tesla, for example, many stocks that created, and I'm going to show you these on MetaStock, created this initial green color when prices were bracketed very low. So we were getting ready all the time for another breakout and a trade entry. So it's nice to know if you're getting a green light on your trading system that you're already using, and you're also getting a green down here in the indicator, then that's a really nice filter to know if you look at the high that created that green, that you're at least going to get that high when you take the next trade. Also helpful to know if you're thinking about getting out of a trend, for example, on the far right-hand side where the arrow is now, if you have a high here and you're thinking about getting out, you may want to stay in and only scale out or just stay in completely, because with a 75% accuracy rate on the indicator, you've got a good chance of, again, heading higher. So I think you can see from this how it can be helpful in order for you to make decisions as the market's unfolding of what kind of exits you may want to be doing if you're long in a particular trend. So again, if you're long in a trend and you have a green indication, you're going higher in the direction of that bullish trend. Likewise, if it's a bearish trend, you'll see red. All right, so let's move on to another slide and take a look and see what that shows. All right, here is an actual MetaStock slide here. Notice we had an uptrend breaking out here. Okay, a little pullback. All right, then it created another breakout with a green here. Now you can still get a trend on a yellow. A yellow is neutral. It's not a bad thing, but you certainly don't want to be taking long positions if you have a red colored PTF. So you want to stay with a particular either yellow or green color in a bullish trend, and if it's a bearish trend, you want to stay with a yellow or red color. So again, when a market creates these certain tops and heads higher, if it remains green, it's going higher. So here you had a little breakout here that may have caused some uncertainty. It pulled back a little bit, but again, you had a green PTF still, and it eventually made higher highs. All right, here you made a high here, and then you had a very severe pullback here. So most trading systems would have stopped you out, and of course, this would have been the case here as well. All right, then on the leg down here, no more green here. So if your system generated a short trade, you could take it here. And of course, if you got to this peak here to the downside, then you know you have more lows coming. So just hang with it. And then you've got the more lows that came eventually here. Okay, so that's just kind of a little bit of an indication on how to use it. And again, we've seen it in many different types of markets. Doesn't matter if you use candlesticks or what market you're trading. You could trade the Forex, you could trade stocks, ETFs. We use it on everything, futures, commodities. But the idea here is that when you had a green indication here, you made a high here, market rolled over, started dipping down greatly, and then we reached what could be a possible bottom, but according to the PTF, we had more lows to come, so we want to stay with the short trade. Okay, and then the market broke eventually down and even went lower than that. I want to switch and go to the Optimum Wave Locator now, which is a different indicator, and then we're going to come back and look at both of the indicators working together. All right, the Owl indicator is an interesting indicator. It's a histogram. The color of the bars really don't matter. You can set them up to all green, all blue, combination of red and blue. What is important on this histogram is whether it is above the zero line or below the zero line. And what's the zero line? Well, of course, that's the line that delineates upper histogram bars from negative histogram bars. And notice that there's at times where you'll see certain symbols like a pink dot or a wave 3 indication here on the actual histogram. And when you see that, that is usually a wave 3. At times we see that on some major wave 4s, but for the most part, it occurs on a wave 3 if you're an Elliottician. Now, if you're using a current trading system, all right, you kind of can vary. You don't even have to know the Elliott wave. The main thing is don't take any long trades unless you have the owl above the zero line. So a lot of folks use it in that format alone and take negative trades or bearish trades when the owl is below the zero line. If you're an Elliott wave person, the owl histogram will always have the highest peak on a bullish Elliott wave 3, and wave 4 will always have a negative owl. Okay, so if we go on and take a look at a few more examples on Elliott wave here, we get to see that in a bullish Elliott wave, basically it moves in 5 waves. Waves 1, 3, and 5 are all what they call impulsive waves moving in the direction of the trend. And this is a bullish trend in this example. Waves 2 and 4 are corrections in the bullish trend. So altogether, it's made up of 5 waves. Now, when we look at the owl will have the highest histogram during wave 3. It will peak on this particular move here. Now, likewise, when we look at a bearish trend down, we have the same format. We have 5 waves down, and then we have waves again, 1, 3, and 5, all going in the direction of the trend. In this case, they're red because it's a bearish trend. Waves 2 and 4 are bullish corrections, but again, the entire trend is made up of 5 waves, with the owl peaking even on a bearish wave on wave 3. If we take a look at this to see a little bit more how this would look on the owl, here's an example of a wave 3 up here, followed by a correction, and then finally a new high here. And notice with the owl histogram here, you have what we call bearish divergence. The owl histogram value at the top of this peak here, which is technically a wave 5, is lower than it was here and higher here. So prices were lower here, and you had a higher owl. Owl was lower here, prices were higher here. So that's bearish divergence in the owl indicator itself, indicating now it's time for a change in trend. If we look at them both together, okay, we get to see here a wave 3 is occurring here during this major owl histogram value here occurring here. We have an ABC wave 4 correction. Notice the PTF in this example is still green. So we have higher highs to come, meaning the trend is not over. And then, of course, after this wave 4 occurs, then wave 5 unfolds. And notice the owl here as it's topping is still below the value, the histogram value is still below that of the previous owl. Now, the owl is not something that is programmed in MetaStock. It is a proprietary settings of programs that we have developed here. Same thing with the PTF. All right, let's look at another one here. This is going to be, of course, one that everybody should know. It's Apple. We had a wave 3 here. All right, ABC 4 here. Reached a nice fib retracement level, and fib retracements are available on the MetaStock platform as well. Everybody has access to those. So I would suggest getting familiar with those because they're very useful if you're into the Elliott Wave. We had a negative owl also corresponding to wave 4. Then the owl goes positive and it starts to move back to the upside, reaching a target zone that we had developed again with Fibonacci extensions this time. But notice the bearish divergence between this owl and this owl. Notice on wave 3 top, okay, once it reached wave 3 top, it went to yellow, back to red, back to green. Didn't go red until the trend was changing. So again, that as long as this remains green or yellow at this point, you can take trades in the direction of the trend. When it turns a different color, then of course you want to go with the direction of the new trend in that color. All right, this was the actual Elliott Wave count in Apple, okay? And of course, it's never as clear as it is on a piece of paper, but you can certainly see we had 5 waves in wave 1, which is what an Elliott Wave requirement is, ABC correction, and then you have a wave 3, 4, 5. So there's waves inside waves, which is why we drew the lines of smaller proportions inside all these waves to correspond with the count reaching a wave 5 top. This is the kind of information, if you find yourself a little bit struggling with Elliott Wave, you may want to pre-order this book because this is the kind of information I'm going to go over in great detail in the book, Elliott Wave Techniques Simplified. All right, again, Apple, after the sell-off this time, notice the wave 5 target zone. You saw that already. We labeled it this time. Notice we had a 3, 4, 5 on the owl, okay, change in trend all the way down, and then a red PTF indicating that we're going to get more lows. Wasn't quite over yet on its downtrend. So when you get to a bottom like this, it's helpful to have this because it's a great indication that if you're holding a short position, don't worry because you got a 75% probability that it's going lower. You're at the mature part of the bearish trend simply because you see a tremendous amount of bullish divergence. So at this time here, you can scale out if you got really worried here, or stay with the bearish trend depending on how the structure of your trading approach is geared. But it can help you when you get to certain bottoms or even tops to know if you're going to get another high. For example, if you got to this wave 5 target zone here, all right, notice you're in yellow territory, so it's not telling you it's going to make highs. It's neutral at this point. So any sell-off here, you would just go ahead and use your trading approach without the indication of the PTF because it would be neutral at that point. And then when you get to a bottom like on the far right-hand side, you may want to continue to hold your short position until you get a yellow. Okay, so that's kind of basically how we use it. Now we got a special on these, and I'm going to put a link up here. If you're interested in these, we sell them. You can either purchase the PTF alone or the Owl. If you purchase them alone, we give you 30% off, I think, and if we get them both, it's 50%. But I also now want to go to some live charts and take a look at that. So let's switch over here. Give me a second while I switch to my actual share my screen. All right, while this is switching over to a MetaStock platform here, let me just make sure when you see the chart, just let me know in the chat area so I'm sure you can see what I'm seeing. Chart, okay, thank you, Gene. All right, so on this one here, this is Tesla Motors, okay, and on Tesla here, notice that, let me get some drawing tools, see if I can, okay, I'll just use my mouse. All right, so we moved up here and made a high here, okay, back in December. Notice we had a sell-off here, okay, we still had a green PTF, so we knew pretty confidently we're going to make more highs. We did, all right. And then it turned yellow, neutral for a little while, but then it went back to green when it made a recent high. Now, this is interesting because back here in the September time frame where my arrow is right here, this area here appeared to us as a wave 3 top. And we went into a wave 4, it looked like, and then we started moving out into a wave 5. So the long trade was taken here, okay, to go long. Then we got to a top here, and look what happened. Look how large the owl value is, okay, compared to the value back here on this run. Notice the PTF did not go negative until way here in October. You look on the left-hand side of the chart. So this entire move up here is wave 3, and it topped here. So then it went negative. That was a correction. And it turned out to be a minor 4 inside an entire dominant 3, okay? So here we reached a top here of wave 3, all right, because we had a dominant owl histogram value higher than here. So this is wave 3. Wave 4, after this completes, we're going to see wave 5 with higher highs. So we're still bullish on Tesla Motors simply because of an extreme owl value here, indicating a wave 3, and a green PTF at the bottom. So again, we wouldn't be taking really any short positions here. All right, we would be waiting for this correction to subside and have some buying come back in, and then look for going to the long side. Now, the colors on the PTF can be generated any which way you kind of want to. You can change them all to blue, or a red and green. This is how it comes as a default, but you can change those. And they're taking the average true range of previous histogram values and determining the heights of those based on the heights of the ones above the negative and below the negative and above the positive area, and then creates green and red And it's basically a very conservative approach. It's basically saying we've had a downtrend here, and this is a stagnant market moving to the upside, finally breaking out here, which is where it turns green. But the main way in which you want to use the owls is if it's above the zero line, all right, you can take a bullish trade provided the PTF is at least yellow or green. That's the key thing, okay? All right, so that is Tesla. Let's take a look at a couple others here and see. Target is one. Let's take a look at Target and see how this one pulls up. All right, so this is Target. This is, of course, a retail stock. Now notice here, all right, we had a move to the downside, okay, and now we have the owl kind of a little positive, but going back and forth. It hasn't gotten positive really enough to turn the owl green yet. But again, what's really important is whether the owl is above or below the black colored zero line there. And notice that the PTF is green, so it looks like we're going to get higher highs on this. What price bar created the green? It looks like it was this one here when this line dipped just to the above upper band here. So if we get our data window out and take a look at that, we take a look at this price bar that formed on February 28th here, and it had a high of 62.88, and we're sitting at 58.32. So there's a 75% probability that we are going to go higher than that high. The low here also too makes sense in terms of an Elliott Wave count. We had a 3 here, all right? Then we had an ABC 4 here, and now we had a 1, 2, 3, 4, and a 5 reaching down into this area here for a bottom. Notice the bullish divergence between here and here. All right, red indicator now turning green. So at this particular point, we are now on a move to the upside. All right, so long trades would be taken to the upside based on these indicators, but because the owl is below the zero line, we would not take any bullish trades until the owl gets above the zero line. So if you're using a trading system there at home and you want to have a little bit of a filter of when to go long, you can actually use the owl as that filter and not take any long trades until the owl is above the zero line. We have found that has saved our butt many, many a time of getting into markets a little too early. So if you wait for that to turn, then the momentum has changed, and it's pretty quick and agile enough that it will turn in time so you can still make quite a bit of profit on any particular trend of significance. Now, don't forget, the PTF is green. If this PTF was red here, all right, we would not be even considering any long trades. But because it's green, we would consider long trades. We do think we have a pretty good bottom in over here, and we had bullish divergence in the owl, but we want to wait for the owl to go above the zero black line before initiating any long trades. Let's take a look at another one here. How about EC? Okay, EC is another one that's sold off. And by the way, this is kind of some of the ones that we like to scan for. We like to get in as soon as possible on good trends or get in after good corrections. We don't like to chase markets that are already overextended. We have found that, of course, if you do that, then you've got to suffer through a fairly severe correction, and if you're using any type of risk control, you're probably going to get stopped out. So it's kind of better to try to time your entries after significant sell-offs if you want to go long. For example, when the market tops, you want to look for some short trades, okay, after the market trend has ended to the upside and you have a nice bearish divergence on the owl as well as an Elliott Wave count that you can make sense of. So in a case like this, notice that here is your steepest owl indicated by the histogram value and even this little line that we draw here to find that for you. And then we had a wave 4 correction up here, wave 5 bottom here, finally. And now the owl has gone from red to yellow, red to yellow, red to yellow, red to yellow. Now it's going green. So this is the first time in quite some time, just about a year, that we've seen a green colored PTF. So now at this time we're looking for bullish trades, but again, we will want to wait until the owl goes positive. If you took a bullish trade in this area here, all right, you certainly could have, all right, especially if it cleared this little resistance level here, but you're going to want to put your stop at the very bottom of that run because the first initial breakout is usually followed by a correction called wave 2, which can correct anywhere from 38.2 to 100%. So you need to have enough room in there for the volatility in the first beginnings of a trend. All right, so that's kind of an interesting one. That is one we're looking for a long trade on here, all right, at any time when the owl goes to the plus side, obviously. All right, let's move on and see a couple others. One other here we look at is Newmont Mining. And let this one come up here. All right, so this one here has come down quite a bit. Owl went back and forth. We have bullish divergence in the owl, okay? And notice we have a channel. All right, now Newmont Mining is obviously just like it sounds. It's a mining company for metals, all right? And it's had what we think is a fairly decent bottom back here in February of this year. Now it seems to be moving off that bottom, all right? We have had red and yellow only at this point, so we have no green PTF yet. And so it's probably a little early to enter for a couple reasons. One is that it's in this channel, so it'd be kind of nice for it to really break out of the upside of that channel before we get too excited about a long trade. And likewise, too, if we get a break to the upside here, as long as this is yellow, we can take the trade to the long side, and the owl has to be bullish. But we've had tremendous, tremendous bullish divergence on this indicator down here on the owl. So we do want to pay attention to that. Of course, with bullish divergence, it can last a long time. Look how long this one lasted, maybe about a year. Okay, so you don't want to use bullish divergence alone for entries, but you do use it to see how mature the trend is getting, and you still want to make sure it breaks out of key levels of resistance before taking any long trades. And so at this particular point, if it breaks out above these price levels here, and if we take a quick look at the data window here, you may want to put these on a watch list at home. You know, a high of 26.5, we're sitting at 24. So right now we're kind of stuck in a channel. We don't want to go into it too soon. And I think once it breaks above that, we'll get a decent owl at that point. And then it should start to trend, and you probably will start to see a PTF starting to oscillate between yellow and green. Okay, so we're going to watch that, and that's on a watch list that we have as well here. Okay, so let's move on, take a look at a couple more here. All right, ASTC, let's see if this one will come up here. Let me try this. So on this one here on Astrotech, notice we had a huge owl pull up on this major move to the upside. And then we had a sell-off. We're still in technically the correction. We want to wait for the correction to break out. We got a negative owl right now, and we have a yellow colored PTF. So that's neutral. So I'd like to see a breakout first before considering this trade, but I do think we're going to get higher highs based on the fact that of the Elliott Wave count alone. Okay, so you don't want to enter this yet, but it is something you would want to put on a watch list to consider a little bit later, perhaps. Let's try VVUS.O. Okay, this is another classic one that I like to look at. Notice it's had a nice sell-off here, but also notice that we're seeing bullish divergence here, okay? And so that's something we like to look at. Notice we've had red, 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 green, yellow, red. So it's neutral. So we haven't had any green yet. We're so close to going positive on the owl. All right, we think we're really at a major bottom here on this. It's starting to show signs of life here. We've got a key level of support here. All right, we're waiting for that to be broken, and we think if that's broken, then of course the owl will go positive, and we can look for some long trades, and then I think the PTF will start kicking in with some green. So again, this looks like a good possibility to take advantage of here a little later after it moves. But again, the owl, okay, is great to keep you out of getting into trends a little too early. All right, you want to wait for that to be positive before considering. And then look for also some key levels of support that were formed on the downtrend, because those become key levels of resistance for the next uptrend. All right, so I think you kind of get the idea of the way in which we use these indicators. And again, they're not going to give you exact entries and exits. You have a trading system for that. But what these will do is they will be an excellent filters for you at certain times for you to get a second opinion on what the market could be doing. And for example, you know, if you're heading down in this area here, okay, and you had a low here, like back in here, and you got a red PTF, well, even though the market might have perked up, all right, as it usually does when it changes trend, here it is, almost came close to the top. It's almost 100% retracement. These are also known as double tops, and you get double bottoms too. But when that thing is red like this, there's a 75% accuracy that you're going to go down again. So if your system generates a short trade and you've got a red PTF and you can take that on the next bearish owl, then that's going to put the odds, really load the odds in your favor. And so I think that's what these things bring to the table, so to speak. Okay. We don't have any scanning capability on these, but what I would suggest doing in terms of the scans that you could use is scan for markets that are either near all-time lows, all-time highs, and see what kind of divergence is created in the owl and see what the PTF looks like at that point. That's a good question. All right, let's go back. Let me go back to, I'm going to stop the screen sharing, and we'll go back to the slides, and hopefully they'll start where we left off. Okay, so that's pretty good. All right, so again, if you're interested in these, all right, this offer will be good till Friday. All right, so we've got this offer here. They're very inexpensive. These are lifetime licenses. If you need any help, we can remote in and help you install them on your MetaStock for you. But they're pretty easy to use. I think you can see that you don't have to be a rocket scientist to actually deploy them in your current trading approach. But again, they're great filters. They're kind of like having I call them the trading buddy, my trading buddies, because they're at times when I need a second opinion, they're there and they work out really good. All right, so I want to just finish up by saying I want to thank everybody for coming. If you have any last minute questions, feel free to ask. I'm going to put it back on this page here in case you want to write that link down, okay? So let me just hang here for a second just to see if there's any questions. What are the prices? Well, the prices for each indicator is $7.98, all right? But if you click on that link, Bill, it will take you to a page where you will have access to the actual order pages. If you buy both indicators, it's 50% off, okay? And if you buy just one indicator, we give you 30% off. So we're trying to get you to get both, and we really think it would be best for you to get both. So you're talking about $3.99 for both indicators. And that's a lifetime license. So we do updates to these all the time, and you would have access to the updates. Okay, any other questions? Going once, going twice. Well, okay. Well, again, thank you. I hope, you know, I was able to shed some light on some indicators here that I think could help everybody, regardless of the kind of trading you do. And they're, again, easy to use, easy to add to your current approach, and I think that's what makes them so successful and popular in the marketplace today. So without further ado, I'm going to, Dave, turn it back over to you, and I want to thank everybody at MetaStock for having me. And again, thank you everybody for attending today. Have a good week.
Thank you, Bennett. It's been great to have you in our webinar room. Thank you, everybody, for spending time with us, and definitely take up Bennett on the offer for 50% off. These are very popular indicators. They're coded for MetaStock, and they have an excellent track record. I think that's all you can ask for with the system is, you know, how has it worked? How does it currently work? And are people real happy with it? And generally, people love these two indicators. So we definitely want to encourage you in that direction. We think it'll make you a better trader. And if you have any questions, I've certainly, they will absolutely take good care of you and answer those for you. Make sure you've got their contact details and the links there. We'll go ahead and close the webinar for today. Thank you for attending. We did record this, and so we will, for those of you who would like to review the webinar, we'll go ahead and send you that recording. And best of luck to all your trades. Thanks for tuning in, and we'll see you in the next time.